From serene horse farms to tech powerhouses, small rural areas across the U.S. Bible Belt have undergone massive transformation in data center hubs as of recently. With the AI boom driving demand, these large power-sucking centers are guzzling up energy, straining the grids, and sparking concerns about blackouts and rising costs for you and I. Globally, the energy consumption of data centers is skyrocketing, threatening clean energy goals and causing potential hikes in consumer energy prices. As your energy bill shot up as of late, it could be the result of the tech and AI boom in your city that you're not even aware of. Let's talk about this. All right, hope all is well. Wanted to take a quick minute and share some thoughts in reference to two articles that I came across, one released today and then one released 2 days ago about the current energy consumption as well as the AI and crypto boom that's underway right now. And I think it's something that we all should be paying attention to, whether you're proactively investing or if you're of the mindset that it's in a bubble right now, you're not wanting to really put any skin in the game, completely understandable. But regardless of what you're currently doing right now as far as investments in the tech sector, no matter what, the current energy boom as a result of the AI and tech boom is causing a major disruption, both for the good and for the bad. And the good is that the price appreciation of Nvidia is distracting everybody, as well as exciting a lot of people who happen to have gotten in early and feel like the stock will continue to go up regardless of what the overall health of the economy is. And then on the bad side of this is that the higher the stock price goes, which has a lot to do with demand, meaning that the actual infrastructure and technology that's being built out will require more energy consumption. And therefore, you're going to see a lot more data centers popping up all across the country in this tech race, ultimately to try to fulfill the desire of what we consider down the line as quantum supremacy. And the first company that does that will literally change the way we do everything. And so in this short video here, just want to share some thoughts and whatnot, share with you some articles and some headlines, as well as point out some possible opportunities for you guys, for those who like to speculate and keep their eyes on hidden gems that have yet to really make the headline news as of yet. But there's three things that we can count on as of right now in this decade. The AI and crypto boom is fueling the energy surge. And the primary reasons for that is greater advancements in technology, the need for these companies to build out infrastructure, and finding ways to power the future to accomplish all these goals. So the very first article I'm going to start off with is from Forbes as of today, and it says, is Nvidia stock in a bubble or justified by AI growth? And so as I go through this article here, it gives a very unique perspective, just because the author admits that there's a lot of hype and hope based upon the momentum up to this point. But then again, he does admit that there's a lot of risk associated with astronomical figures that we're witnessing right now from Nvidia. But my take on this is that the Nvidia drive is sustaining the economy right now. All eyes around the world are focused on this one company as it continues to grow in market cap. Therefore, as long as it stays inflated, demand will remain, which ultimately supports the underlying foundation for this tech sector, this AI and crypto boom that we're witnessing as well. So therefore, more energy demand. But real quick, I'll thumb through some things here that caught my attention. But as always, curious to get your thoughts on this matter as well. So feel free to leave a comment down below. That's whether or not you think it's justifiable or not for the current market activity. But it starts off with saying, Nvidia shares dropped nearly 7% in 2 days last week, sparking concerns that the meteoric rise of AI market leaders' stock price may have peaked. Then it says, first, the 7% dip should be taken into context. Nvidia shares are still up 156% year to date, and last week's dip is relatively minor and barely shows up on the long-term charts. When you look at this chart here, you can see exactly what they're talking about. This type of activity right here is completely not normal, so it spells bubble altogether. But then again, when bubbles like this support the financial narratives that help the economists, this could go on for quite some time until it doesn't. Then it says, still several concerns are causing investors to reevaluate their faith in the rally. Gaining the throne as the world's most valuable company when the overall economy appears to be losing momentum is one obvious worry. Then it goes on to give some figures about the data center growth as the stock prices surge. It says here, specifically, Nvidia's financial results for the first quarter of fiscal 2025 showed revenue growth of 262% compared to a year ago. Data center growth has even more impressive, climbing to 427% from last year. So basically what it's showing is that the greater the price surge, reflective of the demand, the more products they sell, therefore the more buildings go up across this country and around the world to support the AI and the crypto boom. Real quick, here's another article. AI and crypto mining are driving up data center energy usage. Then it says data center electricity consumption is ballooning as cryptocurrency and AI take hold, according to a new report from the International Energy Agency. And then briefly, they go on to say data centers could gobble up twice as much electricity by 2026, thanks in large parts to cryptocurrencies and artificial intelligence, according to a new report by the IEA. At this current moment, it says data centers, cryptocurrencies, and AI make up about 2% of global electricity demand as of 2022, using some 460 terawatt hours of electricity, according to the IEA's electricity report that was released. But by 2026, electricity consumption from data centers, including those used for cryptocurrencies and artificial intelligence, could rise up to 1,050 terawatt hours, depending on the pace the technology develops. In this country right here, it says the U.S. has the most data centers as of today, with 33% of the world's of approximately 80,000 data centers. And it's also the country with the most Bitcoin mining. And as of right now, as you can see on this chart here, this is future projections at the current pace of demand for all these data mining centers, which means more energy consumption and the possibility of Nvidia stock continuing to rise, because they are the ones that, for the most part, provide the materials for these data centers, i.e. in chips and things of that nature. So as you can see here, the Nvidia bubble might have more life in it as long as the tech sector is continuing to disrupt the industry with software and the like. And it all comes back to the need for alternative energy sources outside of what they're currently using now. And then here's the third article I was mentioning here, where it says AI is already wreaking havoc on global power systems. And this came out as about 2 days ago, but it's quite lengthy, so I won't actually read through it all. But ultimately what it talks about is the massive build out of data centers in small rural areas where the residents there are being crowded out and land is being bought up to put up these gigantic centers, because in those areas energy is cheaper, there's more land, and they're closer to water sources that allows to cool down some of this technology they're putting up. So just to share with you a couple key points here, it says in the U.S., power demand is expected to grow by 40% over the next 2 decades, compared with just 9% growth over the past 20. Data centers are the biggest reason for that demand boom. And this is from an interview with the CEO of Nextra Energy Incorporated. But when he's asked why data centers were suddenly sucking up so much power, his answer was quite blunt. It's all AI, he said, citing energy needs for training models and also the inference process by which AI draws conclusions from data it hasn't seen before. It's 10 to 15 times the amount of electricity just needed to accomplish that. And then here's a quick map here highlighting the electricity use in a lot of countries here. As you can see, it says altogether data centers use more electricity than most countries. It says only 16 nations, including the US and China, consume more. And so from year 2000 all the way up to where we're at currently, this graph here looks very similar to the Nvidia graph that I referenced right here about their price action. So what does all that mean? From this year forward, because of this technology boom, the demand on these chips to produce the servers needed to complete these data centers are going to continue to increase. Therefore, energy consumption will continue to go up. So at this current moment, even the article I just mentioned, one of the concerns is that within these small towns throughout the Bible Belt region where these data centers are being built out, the residents' energy bills are going up because the grid is taking on more of a strain with these powerhouse data centers that are also connected to those same grids. That even though they got certain deals worked out, ultimately that entire city that once before held 30,000 or so people, now it has 30,000 people plus a data center that consumes just as much as that entire city, if not even more, depending on how big their infrastructure is. So you can see how throughout several pockets of the country, there's going to be areas where everybody's energy bill will be tapped into, because the more this data center evolution evolves, the greater demand for more energy. And at this current moment, they got wind power and solar, but then again, that's not enough to meet the demand. So there's going to be a need for alternatives. And what I believe in a lot of other investors is that nuclear will definitely play a part in that. Here's another article: why the AI boom could reopen the doors for nuclear energy. Within this article here, it goes on to talk about current energy usage and what will be needed for the future as AI continue to evolve, and how more investors behind the scenes are excited about the opportunities that nuclear reintroduces back into the space, because it might become a viable opportunity for a lot of companies and cities to partner together and build small modular reactors where the entire city can have like a mini nuclear power plant within its city that can provide more than enough power for the consumption uses of data centers, as well as power the city as well, therefore lowering the cost to residents' energy bill. And so once again, the reason why I mention all this is because there's no way of avoiding the tech boom, because the demand is there. In order to have it continue to evolve, the infrastructure needs to be built out. Therefore, the energy will need to be used to power that stuff. So it's all interconnected. And so for those who like to speculate and look out into the future, see what is probable when it comes to supporting markets like this, it's definitely going to be something involved to clean energy usage. And then that gets into the idea of nuclear. And so with that, let's take a quick look at an energy company that you might be hearing about real soon. So as of this past market closing, AAS Energy stock was at 56 cents. And over the last 3 months, it looks like it's hovering around 50 to 55 cents or so. But it's good to speculate that this stock won't remain this cheap for too long, or going into this technological boom where we just finished talking about. Alternatives like AAS Energy might be primed for tremendous growth due to the lack of U.S. uranium production, as well as the recent bipartisan legislation that's banning Russian imports. Here's quick 5 reasons why AAS Energy is at least worth taking a look at if you haven't already. Number 1, they got prime real estate. AAS has the most acreage in the Athabascan Basin, known for its high-grade uranium. AAS's position in that region is very advantageous because the basin grades are 10 times the global average. Number 2, they got cash on hand. AAS has the most cash among small uranium firms. They can lead big projects with their $42 million for exploration, unlike some of the competitors in their region that got less money. And one of the most notable is the third one, their strategic acquisitions. Their recent acquisition of the Angalac project, one of the world's most promising uranium sites, shows their aggressive and strategic growth intentions. And also, fourth, you got to respect the team. AAS ran by CEO Troy Boswell, formerly of Chemical and NextGen, and his staff have an unmatched competence in identifying and developing on huge uranium projects. So overall, AAS Energy is a leader in the field, poised to capitalize on a changing global energy scenario I talked about earlier. They're going to be dominating the uranium market with its unequaled land holding, strong finances, their savvy acquisitions, and superb management team. So in this race to secure uranium for the future, projects like this will surely get a lot of attention in the days ahead. If you're interested in finding out more, their ticker is SASKF. And I'd encourage you, if you haven't, take a minute and visit AASenergy.com and see for yourself what I'm talking about. This could be a project you might hate to miss out on. And so once again, just trying to share with you opportunities that come across my way so you can take a look at them and see if it's something for you or not. But once again, we have all the indicators leading to the fact that uranium will be a part of the future because of the tech boom, which will lead to the infrastructure boom, which will then lead to energy consumption, and they're going to have to power it somehow. And clearly uranium is going to be a part of that at some point soon. So anyway, just want to share this with you. Curious to hear your thoughts. If you enjoyed this, hit that thumbs up button. Leave some comments down below. Let me know how I can improve, as well as what you thought about this delivery method and packing up this information and delivering it to you so it's something you can actually use. But anyway, catch you guys later. Peace.